You may wonder why it is necessary to keep a separate trading journal, since just about every broker provides a real-time record of your trades. In fact, one could argue that the broker's record also keeps track of available buying power, margin usage, and profit and losses for each trade made. Still, there are benefits to keeping a separate trading journal, and here is why. 1. Historical record. Over a period of time, the journal will provide a historical perspective. Not only will it summarize all your trades, but it will provide, at a glance, the state of your trading account. In other words, it becomes your personal performance database, which will provide you with the opportunity to go back in time and determine how often you traded, how successful each trade was, which currency pairs performed better for you, and even what time frames gave up the best profit percentages. 2. Planning tool. Not only should a good trade journal record your actual trade data, but it should also provide information on what your plans are for each trade. This feature allows you to consider each trade before you take it by setting parameters for where you want to enter, how much risk you can accept on the trade, where your profit target will be set, and how you will manage the trade as it proceeds. In other words, the journal becomes a way for you to record your thoughts in actual numbers and makes it possible to convert wishful thinking into practical reality. It forms the basis of a method for planning your trade and then trading your plan. 3. Methodology verification. Another very important byproduct of a trading journal is the fact that, over time, it will verify your methodology. You will be able to see just how well your system performs in changing market conditions. It will answer questions like, how did my system perform in a trending market, a range-bound market, different time frames, and the impact of your trading decisions, such as placing stop-loss orders, too tight or too loose. In order to retain the full details for the logic behind a particular methodology, the trading journal must be fully comprehensive. 4. Mind pattern modification. One of the most useful features of your journal will be the concrete help it provides in forcing you to change your habits from destructive to constructive. As you learn how to trade your plan, you will develop a greater level of confidence. Your profitable trades won't feel so random, and your losses will be planned for, and therefore won't ding your psyche in a way that will make you feel that a loss means you're a loser. A very important mental and emotional factor in trading is your level of confidence. Confidence is the antidote for the fear and greed cycle in which many traders will get caught. Fear and greed is a natural, hardwired response in most humans. If you are winning, you want to win more; if you are losing, you feel fear and even panic as your account dwindles towards zero. Having a journal that gathers your statistics sets up a trading plan by defining parameters of action needed, provides a rear-view mirror so that you can measure how well you executed each trade, and most importantly, provides you with the feedback to develop and evolve your trading skills. You will find a good trading journal to be a best friend and mentor as you make progress.